to my channel. Welcome to the channel that gives you all the information on tax and accounting matters, the channel that speaks to you about all your compliance issues, the channel that helps you to stay on top of things, the channel that helps you not only as a business owner, but also as an individual in your own right when you're trying to make it in this crazy world financially. So we've just gone live. It's just on 10 o'clock. And every Thursday we are here, we are live, and we are giving you content. I'm just going to straighten and fix my camera. So for those of you who will join us later, who will watch this live stream later, I get that a lot. Please feel free and you're welcome. And please also share this with someone who may need this knowledge. And of course, please please engage. I do from time to time go back and check comments. We are on every Thursday, 10 o'clock, and it's a 30-minute session. We were doing Thursday evenings as well, same topics. For now, we are restricting it to the mornings only. And if you need to connect in the evening, you will find the stream available. So to the people that are connecting, that are still on their way, we will wait just a few minutes for you and then we will start. But other than that, please do check our other videos. Hi Narupa, thank you for connecting. Thank you for also letting us know that you are live. And hi back to you. Hi Kimira, also good to see you. And hope you will find today productive and useful. We're tackling a couple of topics today, and yeah, I hope you'll enjoy. Please like this so that it can go far and it can connect with many people and gain traction. So last week, I must apologize, I was unable to come live. I am live every Thursday, but last week I was unable to come live, and I did try and let a few of our consistent followers know, but I left out a few. So I do apologize for that. But thank you for coming back on and giving us an opportunity to connect with you once again. I'm just going to wait for a few more people to connect before we start our subject matters for today. Maybe for those of you who are early and on time, I can start by telling you what we're going to be discussing. So we will be looking into, because it's the tax season, obviously this is the hottest topic on the table right now. Everybody's worried about their personal taxes, wondering whether they're going to get a refund, wondering whether they're going to have to pay in. Hi, Notando. Good to have you online. And yeah, thank you for connecting. So we're going to discuss the personal tax aspect, but we're also going to look into something more corporate. We're going to look into what it takes for you to start off running a successful business. I've been running a businesses for years, so I think I can help. And also, obviously, I coach many business people and we do the accounts for many business people. So I think I have quite a well-rounded experience in different areas, and I can tell you one or two things that might help. I'll just wait for a little bit of connectivity and then we can begin. So we will discuss mostly those two topics. One, we'll talk about the personal tax aspect, and two, we'll talk about starting your own business and some of the things that you need to do, some of the pitfalls, some things that you need to avoid. And 30 minutes is really never enough. But I also don't want you to get bored. I need to make sure that I'm capturing your attention, so I don't want to make it longer than 30 minutes. I think when we first started, we were doing 45 minutes to an hour, and then I decided to shorten it. I think we're going to start. Let's start. So welcome to everybody. Welcome to this channel. And on this channel, we discuss tax and accounting matters. Hi, Belinda. Thank you for joining us. And also thank you for letting us know that you are here. Appreciate you. So on this channel, we discuss tax and accounting matters. We discuss business matters. We discuss compliance. Please do go on and check out our other videos. Please share them. If you find them interesting, please make a comment down below. And I hope you will enjoy today's session. As I said earlier, every 10 a.m. on Thursday morning, we are here. We're connected, serving you and giving you information. So I'm going to start. So remember when we start off, because we're dealing with different kinds of people, I'm going to have to speak up. There's a bit of noise in my background. Because we're dealing with different people at different levels, I have to start off with a foundation. So I might start off with something that might sound silly, simple, easy to you. Please don't get put off. Stay connected. I will build further, and I can guarantee you, I'll tell you something today that you didn't know before that's going to help you. So whether it's from an academic point of view, maybe you're studying, or from a work point of view, you need it in your work, or just for you personally to help you with your own personal life. So we're going to start talking about personal tax now. As you know, personal tax season just opened on the 1st of July. So from the 1st of July to the 12th of July, a lot of people were auto-assessed. Now this year, there was something new that happened. If you were not auto-assessed, you would have received an email or a message telling you that you were not auto-assessed, and therefore please submit your personal tax return. This is something new that SARS started this year, and it has alarmed a lot of people. But I want to tell you, don't be alarmed if you receive that message. All that's happening is SARS is making sure that everybody files their tax return. Now, SARS, for those of you who are connected from other countries or who will connect from other countries, is our revenue authority here in South Africa, and they are the collecting body for revenue for the government. I'm sure you would have your own revenue authority in your own country. But basically what happened is people submitted the tax returns only starting from the 13th. And I think a lot of you will tell me that from the 13th, on the actual day, in fact, e-filing was packed. You could barely get in. And believe me, this has not always been the case. We've never really had problems just because it's tax season. And the reason why is that there's so much increasing awareness now. People are aware that they need to file their tax returns, so they are more educated about it. And also people are hoping to get a refund. And of course, getting a refund, I get that question a lot of times. Why aren't I getting a refund? What is happening? Why should someone else get a bigger refund? I also get people saying to me, please check my auto assessment because I think I should be getting a refund. And I just want to, for a few minutes, discuss the issues of refunds from SARS. So number one, there's only a few categories of people that will get a refund from SARS. If you're self-employed and you are not on a pay slip, you're not actually paying in your pay as you earn every month, you will not get a refund from SARS, because remember, SARS is refunding you from something you've already paid them. So they would need you to have paid in first in order for them to refund you. And of course, when we talk about refund, why the refund? Well, there's certain categories that give rise to credits. The big one, the main one, is if you're contributing to medical aid or if you're contributing to retirement annuity, then you may get credits and get a refund. It also may happen if you've been overtaxed. Maybe you worked for less than a year, or for whatever reason, your employer taxed you more than they should have. Maybe you earn commission, you're selling cars, you're selling houses, and therefore your tax was slightly more. Those are the main reasons why someone would get a credit. Sometimes I also get situations where employers have used wrong tax codes, for instance, for pension and things like that, and therefore the tax has been incorrect, and so SARS will pick up the correction, a refund within 48 hours of the assessment. But it's not always the case. Sometimes because SARS is looking for supporting documents, or they're simply putting together their cash flow, you may not get paid quickly. I had an issue with a client because the refund was from 2025, which is the previous year. She was waiting for her refund and she wasn't getting it no matter what we did. And when we then submitted 2026 last week, then she got her refund. So it's almost as if they want you to be a good citizen before they can refund you. The other thing that you need to make sure is when you're filing your tax return, make sure you have all your ducks in a row and you have all your supporting documents, so that immediately the return is filed. If there's a request for supporting documents, you submit those, because you delay your own refund if you are not ready, and if it takes you days or weeks to submit those supporting documents. So make sure you have everything on you. In the old days, people that were self-employed could get a credit, could even get a refund from SARS. That is no longer the case. If you are self-employed You're not on a salary. You're not paying yourself a salary. You're not paying over UIF and pay as you earn every month. Forget the refund. It doesn't, it's not a given that you will get a refund. Okay, so I think on the personal tax side, I've tackled the thing that interests people the most. But here's one big thing. I am trying to encourage people out there. If you're a director, if you own a business, or if you know someone who's a director who runs a business, and if they are not registered as an employer and paying themselves a salary, as a director, I want to encourage them to do that. Why? Because you can save a lot on tax. Right now, you won't be able to hide your income that you're receiving from the company and fail to declare it, because SARS will ask you to submit your tax return. So why not just pay yourself a salary, do a payslip, deduct the tax, but while you're at it, get a rebate. I'm calling it a rebate because everybody uses that word. It's actually more of a discount and more of a credit. Get that credit on a monthly basis. What do I mean by that? Someone might ask me. There is a way in which, when you're doing your pay slip every month, if you have retirement annuity and if you have medical aid, you do not need to wait until you submitted your tax return for you to get those credits and to reduce your tax. So at the point of doing your payslip on that particular month, if you cater for the credit for the retirement annuity and the credit for the medical aid, you can actually get your refund earlier. In other words, the tax you will pay monthly is reduced. So you're saving on the tax, but you're still getting the salary you desire, because you are building into your salary these benefits that are available. So here's one way in which, number one, you can be a good citizen by paying your taxes to SARS, but they are discounted taxes because you're accounting for your medical aid and RA. And guess what? If you're not doing that, as a someone who's self-employed, that means your medical aid and RA, if you have it, that you're paying, is not being put to use. You're not benefiting from the credits that you could be benefiting from. And of course, when you then want to buy a house, when you buy a car, you go and apply, the banks will say, let's see your ITA 34. Let's see proof that you've been doing your taxes and paying your taxes. And if you haven't been declaring your salary, then you won't be able to get the funding. Also, they want to see you earning a specifically high salary. And of course, because you're trying to save on tax, maybe you don't have that. But if you go this route, I guarantee you, number one, you can now declare a high salary. You get a discount, let's call it a discount or a rebate on your tax. You can use your salary as well to go and buy something big, because you can show affordability, and voila, everybody wins. I must say though, I mentioned something that a lot of people don't know. What is an ITA 34? I get that question so many times. So an ITA 34 is simply the assessment that comes through from the Revenue Authority, from SARS, after you have submitted your tax return. In other words, you cannot get an ITA 34 until you submit your return. What is the ITA 34 used for? Well, if you're applying for a loan, for a bond, for a car, then the ITA 34 gives the bank or the lending institution a guarantee that you've actually been serious enough about what you say you are earning, enough for you to submit those earnings to SARS. And they can check, how much have you submitted to SARS? What does that mean in terms of tax? Has that tax been paid? When did you submit the return? So a lot of things, a lot of information can be gained from the ITA 34. They can also tell, remember at the bottom it tells you which returns are outstanding. So they can tell if you haven't submitted for the past 5 years, and if SARS is waiting for those returns, they can tell. So a lot about you can be found on your ITA 34. So be careful when you're sending out your ITA 34 out there. You're giving people a lot of information about you, which you may or may not want out there. So I think in terms of personal tax, I have probably labored the point for now. On another video, we'll go deeper into the personal tax and a lot of other things. But for today, I'm ending right here. If there are any further questions, please do contact us. I think if you go on our YouTube, you will see our details. Otherwise, I could give you our email address. Those of you who want to contact us for further information. We're also on TikTok, but the information is info, INFO, at corporate mentors. So corporate as in, business, mentors with an S, .co.za, info@corporatementors.co.za. If you need more information on anything we've been discussing, please do get hold of us and we will get back to you. So, on to our second, final, and much more interesting subject. Why? Because everybody needs an alternative income stream. Even if you're working somewhere, you're earning a decent salary, who knows what the future may hold? Who knows what next year may hold? What if the company you're working for decides to retrench? What if they decide to downscale? Or if they lose business? What if the business that they're involved in suddenly goes down and they can't afford to pay you? They can't afford to keep you. If you don't have that alternative income stream, guess what? You might be stuck. And it's not even just about that. Look at the cost of living right now. You need something else to supplement your income. So I'm not encouraging you to play hooky, to steal your boss's time if you're employed full-time and be doing other things on the side. No, I'm simply saying, in your spare time, in your own time, find if there's anything you are passionate about, anything that you love to do, anything that could interest you, but that'll bring in income. That becomes your alternative income stream. That is something you can do, maybe even from the comfort of your home in the evenings and the weekends, whenever. Something even from your phone. Look at me. I'm talking to you from my phone, 30 minutes from my day. But this for us is something more than just an alternative income stream. For us, we're building our brand, we're building our profile, we're putting ourselves out there, and we're informing people. For you, it could be something else. It might just be translating, writing out certain things for people, whatever it is. Find a business that you can do, something that you love, something that will bring in income. But here's the biggest thing. Before you venture into a new business, before you start, please do the following. Do a costing. What do I mean by costing? It doesn't need to be complicated. It can be simple. Something on a spreadsheet that tells you what your expected income is and what would be the expenses. Before I move on, I need to take a question. So somebody said extra income will have tax implications. They're asking a question. So yes, extra income will have tax implications, but remember, only to the extent that it exceeds the threshold. So if we're talking about the 2026 tax year, sorry, I've had to go back and answer this question. If we're talking about the year end Feb 2026, remember we had a threshold, and I'll tell you just simply put, and it's imprinted on my mind. If you're earning a basic salary of 8,000 Rand, your minimum pay as you earn is 3.75 Rand. So multiply that out by 12. 8 times 12, for those of you who are mathematicians, whatever that figure is. It's, I think, 108. I'll work it out later. That is your annual figure that you're allowed to earn without you being subject to tax. So if you're earning the equivalent of 8,000 Rand, just below, per month in the 2026 year, and it would have to be slightly below, then you are not subject to tax on that extra income. But remember, all your income is pooled together into one bowl. So even if you're earning interest at the bank, your interest that you've earned is treated as income together with any other income, whether it's from the IRP5 already taxed, or whether it's from your rent that you're receiving, or any other income, consulting fees, for instance. All of that income is pulled together into one bucket. And then SARS now starts to look at any rebates, for instance. They also look at for interest from the bank. Remember, there is a tax-free portion. So they first of all look to say, is there any sort of tax-free portion that we can remove? Once they've removed that, then they would tax the entire amount. If it then falls below the taxable bracket, then there'll be no tax, even if there's extra income. But of course, if it's within the taxable brackets, then they apply the sliding scale percentages. I hope that helps. Please let me know if I've answered correctly. Next, going back to where we were talking about companies. So you need to do a costing model. What is a costing model? A costing model simply looks into the future. We've talked about budgets before, but here I'm talking about an actual costing present day, where you are giving yourself a scenario to say, if I'm going to sell, for instance, I'm going to talk about refrigerators. Maybe you want to bring in refrigerators from China. You want to go big. You need to say, okay, if from China I need to order a container because they have a minimum requirement, what is that going to cost me in terms of the freight, the duties, the transport, the cost of the fridge itself to land it here, the landed price? And then how does that compare with how much I'm able to sell? Compare with your competitors, who are the main fridge companies. Pick and Pay, all the other companies that sell fridges. Also, you will need to know if you can improve. Do you need to sell a brand fridge, or can you bring in something new that is of good quality and will still be sold? So those are the things within your costing you need to look at. You need to make sure you're making a decent profit. There's no point in you venturing out on a business if you cannot see the profit. Remember, in your costing, you need to account for every single little thing. If you're going to open a bank account, the bank is going to charge you bank charges. Account for those. Be very clinical about it. Don't exclude anything. Remember, you also need to earn a salary from the business, and be hard on yourself. Be able to say to yourself, will I still be making a profit after this? If the answer is no, forget that business. There's no point in you venturing into something where you're not going to make money. Of course, we have some products that are generally known to be what we call high value, high volume, low margin products. Things like petrol. Those kind of things, yes. There's very little markup there because the price is regulated. You can't sell above a certain amount. But the more you sell of maybe a low profit margin product, the more money you'll make. Let me give you an example. In our line of business, for instance, if we are registering companies, right, we already have to pay CIPC in order to get your company registered. Now we then bill you, and the fee we bill you includes what we are paying CIPC. If a client comes and says, I can't afford to pay you much for this company, I'm just going to pay you, let's say, 200 Rand above what you are paying CIPC. Now for us, that's not much of a profit. But if you do 50 of those companies, if you register 50 companies, even though your profit is not high, you're still going somewhere. You're going to make money. So you were all in business to make money. Nobody is there to make a loss. Therefore, you need to consider all of those things to say, if I'm not making much of a profit, can I push this product or this service? Can I get myself out there in a sense that I will still do well, even with a low margin? The point, though, is to increase your margins over time, because you will always have new costs that will come in. For instance, you might decide you want to market, you want to advertise. You might decide you need Wi-Fi in order to do your work or to sell your products. Don't forget to include all those little things. There's also the electricity aspect. Wherever you're operating from, there's obviously a portion of electricity, even if you're running from home. You're also going to need to contribute to the electricity in the house. So all of those little costs must be taken into consideration. Your next thing is you need to make sure that you've done market research. Go out there, find out, do people actually want that product? Does it sell all year round, or is it a summer-only product? For instance, ice. We have a client that does ice. Guess what? In winter, no sales. I also have a client that does ice cream. In winter, low sales. They're still there, but they're very low. So you need to look at all those things to say, can I survive in those months where I'm not making sales? If it's a service that is provided all through the year, then you're good. You're not going to have situations where you can't provide the service. I must say, though, given an option between selling of goods and providing services, just paying a fee, the most profitable business model, we're calling it a business model, is that of providing a service. Why? Because you're going to charge a fee, maybe just for your time. Whatever time you've spent as a lawyer, for instance, people come to you, they consult on matters, you give them advice, maybe you draft letters, you go to court, or you fight the case for them. You haven't incurred much of a cost. It's just your time. And maybe if you have an office, it's your rental. And maybe if you have staff, it's those salaries and things like that. But you didn't need to buy a product and see whether you could make a profit. So if someone came to me and said, okay, what business should I get into? Should I do goods? Should I flip goods? Or should I provide a service? If you're able to provide a service, go for that kind of business. You're more likely to make money. You're more likely to be able to mark up better. You will just be using your intellect, your IP, your knowledge, your experience to be able to get out there and and invoice your clients. Remember also with a service, they are paying for your your intellect, your IP, so and your time. So you need to tell yourself that whatever time I'm spending on this, I need to recover from my client. And of course, that means you can afford to discount. If the client needs a discount, you're not losing anything. Don't be too hard with these fees. Don't be fixed. Some people will tell you, this is my fee no matter what. You need to be able to be flexible if you're going to succeed in business. You need to be able to say to yourself, okay, I need to offer discounts that are not going to harm me, that are not going to hurt me. But with the discounts, be clever about it. Do combos. For instance, in our line of work, you can say to someone, okay, so I will offer you a discounted fee if we do the tax pin, the BEE affidavit, as well as perhaps your financials. Because you're doing more things, you're offering more services, you can afford to give a discount. Or if someone comes to you, they need to do 5 years of financials. You can't charge them the same for each year as someone who's doing just 1 year, because they've given you volumes, they've given you more business. So those are the little things that as a business owner will give you an edge above the other person. But it's important to also know what your competitors doing. You need to get out there, find out how much are people billing or how much are people charging for certain things, because you might just find that you are way too high, or you're making a big mistake because you are undercharging. Now, undercharging is good in a sense. In your starting out years, yeah, that's one way in which you can gain clients, because people come to you because your fees are lower, your prices are lower. But it's going to cost you in the long run, because when you then want to increase your prices, your clients will resist like crazy. They'll say, no, we've always paid. In fact, they'll remind you, they'll say, last year you charged me 1,000 Rand. You can't charge me 1,200. They'll tell you how much they're struggling and how things are not going well. They can't afford. They want to keep you at that 1,000. This is when you need to remind them that there's inflation, number one. You can't charge the same as you charged last year or as you charged 2 years ago, even if you're walking to Pick n Pay. How many things are costing the same today as they were 2 weeks ago even? So that is the danger with starting low, is that it may make it more difficult when you need to increase prices. However, your volumes, yes, your volumes will be good. Maybe you might make profit. But I need you to then be able to say, having done my costing model, this is a viable business. I have enough clients out there, people who are interested. Where I'm situated, I won't incur costs. I'll tell you one little story. I heard of a person out there okay, so we live in Johannesburg, so I'm going to use that example. They were past Soweto, right? And they had like a greenhouse where they were producing all these amazing vegetables. Now, in a place like Soweto, there are very few people who want most of those sort of odd and different vegetables, salad vegetables, things like rocket. There are not many people there who are interested. So that means you're going to incur a transport cost to bring that product out to the north, which is where, as far as most people are concerned, most people will want that kind of product. Otherwise, guess what? Your product will rot. So you need to factor in, is it a good idea to go and place your factory, your head office, far away from your market? Because then you'll have transport. You're also not going to have people wanting to come out from Sandton, from Fourways to go to Soweto. It's far. to buy that product. So those are the little things you need to consider. And I think on that note, I will end today. We are almost on the 30-minute mark. Thank you so much for joining us. Please do like if you haven't already liked, and please share this with someone who will find it useful. Please watch all our other videos. Please join me again next week, 10 o'clock, same time on Thursday, and enjoy the rest of your day. Happy, happy, happy taxing. Happy business owners. I hope you enjoy the rest of your day. Goodbye.